Yo, what's up, traders? How are you guys doing today? Welcome back to a brand new TWC market recap and also market breakdown. In this video, guys, I'm going to be giving you guys a recap of how the previous week, how the previous trading week went for me, and what I'm also expecting to experience in the market this week. So last week's trading was more like a break-even trade. I had one loss and three break-evens, guys. It was crazy. One loss and three break-evens. It was crazy. I ended up realizing that in one of the pairs that I traded, which was gold, that I ended up having a break-even, I realized that I traded in the consolidation market. So it is what it is. I'm going to share my screen with you guys now, and I'm going to jump right into the video. I could have done this video earlier this weekend, but I was kind of busy, so I just decided to do it today, right now, before the market opens, because the market is going to open in like 2 hours, give or take. So let me just jump down into the work for today, and which is this. So right now, if you guys can see my screen, I hope you guys can see my screen. Right now, we are looking at the gold market, guys. We are looking at the gold market, and I'm on a daily time frame. And if you can see on the daily time frame, the market is looking like it has been consolidating all week. So this was Friday, Thursday, Wednesday, Tuesday. Only Monday was the only day we had like a good bullish day. But Tuesday, Wednesday, Thursday, Friday, we just had serious, serious indecisions in the market. So just gonna jump right into how my week went, what I saw, what I was expecting, and I just jump right into the video. So go to the 4 hour time frame. Now, if you look at the 4 hour time frame, you can see I still had my, profit and loss, um, I think indicators, tools rather, tools still on. So you guys can see on Wednesday, on Tuesday, it was a loss. On Wednesday, it was more of a break even. Then when no on Wednesday, a break even. Then on Wednesday into Thursday, I had the trade and it also ended up breaking. So I'm going to jump right into the 1 hour time frame and I'm going to explain what I saw, why I took these trades. So looking at the 1 hour time frame, all right, if we jump right into the 1 hour time frame, we can see that we've been on an uptrend for a very long time. We've been on an uptrend for a long time. And we can see here that we had this little at the beginning of the week, we had this little, trend. We had this little um trend line. Yeah. So if you look at the lower time frame, if you jump into the lower time frames, let's go to 30 minutes, you can see that, yeah, this was the trend of the week. It was the trend of the beginning of the week. We had this higher high, we have this higher low, higher high. Then we had this higher low. This right here was an higher low. Then we had an higher high, right? Then we had this nasty bearish engulfing candle. Because honestly, I was expecting a pullback anytime soon in gold. I've been expecting a pullback because I feel like if we look at the daily time frame, if we look at the daily time frame, we can see that the market has clearly been overbought. But overbought, oversold, when it comes to gold, all that doesn't really matter because the market can be overbought for the whole year and it will still, give us the reversal we are expecting. So I realize we've been overbought, and I have been anticipating a bearish a bearish counter trend correction to correct the overbought trend. So you can see we had this bearish engulfing candle. When we got this bearish engulfing candle, I was expecting. Let me draw it for you so you guys can see. So when we had this bearish engulfing candle, yeah, when we had that bearish engulfing candle, this particular bearish engulfing candle, when we had that bearish engulfing candle. I was expecting price to start pushing down because first of all, we've broken the trend line and we've changed the structure of the market. This was a higher high, higher low, higher high. Now we have what? A lower low. So what? We've changed the structure of the market. So I was expecting the market to sell. So I took a short position and I was targeting I wasn't targeting that low. I was targeting this low over here. Yeah, let me just put that there. I was targeting that low. But what happened? We were in profit for a couple of minutes and then the market reversed, hit our stop loss and still went ahead to create what? An higher high. I was like, okay, it is what it is, yeah. I'm gonna wait for the next opportunity to buy or to sell, whatever opportunity the market presents to me. So after hitting our stop loss, yeah, after price hit our stop loss, I realized that this particular pattern, this is why I had it circled, this particular pattern in the market was a reversal pattern in my playbook. Because after studying the market for so long, I realized that this particular price action pattern here is is usually on 90% of the time, once this pattern presents itself, the market will reverse to the downside. And that's what happened. Once after this pattern presented itself in the market, what we saw price was pushed to the downside. So once price pushed to the downside, I then realized that, let me put that level back. I then realized that the market ended up creating what? If you look at it clearly, this was what? A double bottom liquidity. Then I realized that the market ended up creating a double bottom liquidity. And I was expecting, okay, since we have this particular pattern, let me um mark it out for you guys so you guys can know. So since we had this first pattern, that was the first confirmation, that pattern, I call it the W reversal pattern. And we had the second one, which was a what? Double bottom what? Liquidity. So we had the W reversal pattern and we had what second? We had liquidity. So what did I do? I drew my trend line, my mini triangle descending trend line to, structure the trend. Sometimes when you can't really understand how the market is moving, it's best to use a trend line to really, structure your trend. So once I structured my trend, and we're creating lower low, lower highs, lower lows, lower highs, lower lows, and then we created an higher high, I was like, okay, maybe the market is not ready to grab this liquidity now. Maybe the market is not ready to grab this liquidity now. So what will I do? I'd rather move with the trend of the market. So once that happened, I bought. But while I was buying, I wasn't really expecting the market to buy that much. I was expecting a form of resistance around this rejection candle right here, which was this level right here. I was expecting a resistance. So once I marked that resistance out, but I still took the buy trade. Mind you, I took the buy trade, but at the same time, I was expecting a resistance around this level. So once price got to that level, and then I started seeing, you know, a rejection to the downside. Honestly, I didn't mind taking a break even on this trade. I didn't mind having my break even. I didn't mind having my break even. So it's not really, in fact, the risk to the profit target was not really that much. So just what, 32,000 pips. That's like a 1 to 3 weeks to reward. That was also nice. But it wasn't my reward wasn't that much. So I wasn't really expecting, to make a lot of the move. I wasn't expecting to maximize the potential of this move. So I just, it was what it was. So I had my break even at this point here. After this engulfing candle closed, I had my break even at the open of this engulfing candle, this particular engulfing candle. So once price ended up hitting my break even, stopping me out with a little profit, then I realized that, okay, since we've had that rejection of this resistance zone that I was expecting to happen, this would be what? My third confluence. Third confluence, the rejection of that resistance zone. So first confluence, W pattern. Second confluence, double bottom liquidity. Third confluence, a rejection of a resistance zone I was hoping to hold. So once the resistance zone held and I saw price just creating lower lows, lower lows, lower lows, I entered at the break of this low. I took my entry here and you can see the market played beautifully to the downside. We ended up grabbing But we ended up grabbing what? The liquidity that was down here. This double bottom liquidity. We ended up grabbing double bottom liquidity. And I was expecting the market to see push further to the downside during the CPI news release. But then once the CPI news release came out, it ended up stopping me what? A break even around this previous lower high. I put my break even around this previous lower high here. And the market ended up stopping me right there. So when Friday market opened, I then realized that, oh shit, we've been what? I've been trading a consolidation. And one thing about trading consolidation is the fact that you never really know you're in a consolidation until you've been consolidated. That's one thing about trading consolidation. Like you never really know you're in a consolidation until you then realize you're in a consolidation. At this point, I didn't know when I took my first entry here, I didn't know I was going to trade in the consolidation, right? Ended up creating double bottom liquidity. When I bought here, I didn't realize that I was going to be trading the consolidation. I bought. When I sold here, I didn't realize I was what? Trading in the consolidation until this rejection happened. Then I realized, okay, we are in a consolidation. The market on the market last week was consolidating. Even if you look at the daily time frame, you can see clearly that, yeah, we're consolidating. So once I realized that, okay, 4 hour time frame is even clearer as about the 4 hour time frame that we were consolidating on the in gold market last week. So once I realized that, okay, we're consolidating on Friday, I didn't even bother to trade on Friday. I didn't bother myself to trade on Friday because I've taken one loss and two break evens that week. So I didn't even bother to trade on Friday. So I let the market play out on Friday, and the market still refused to break above this resistance level. So when the market opens this week, what I would be expecting to see, since I've showed you guys all this, let me just delete all that now. Since I've seen all that. So now that the market is going to open in a couple of hours, what would I be expecting next week? Clearly, I can see that the market has kind of been creating lower lows. If you look at it, we've been creating lower lows lately throughout the week. Lower lows, creating lower lows throughout the week. And at the same time, we've been respecting this resistance level. We've been respecting this resistance level. Yeah. And now, if you look at the structure of the 4 hour time frame, you can see that if you look at it from the line chart perspective, you can see that but this particular price action on Friday wasn't a very strong bullish one. We created the high of Friday and then a lower high, and now higher low, yes, and now you're kind of seeing what's a lower high. So if the market opens this week and we break below this level, demand, and we break below this level, break to the downside, I'll be expecting what's a push probably to this low, right? But if we break above this level, when the market opens to in a couple of hours, I'll be expecting what? A price to create what? Another all-time high. So that's my, bias on gold at the moment. But if you look clearly at this consolidation, both buy-side liquidity and sell-side liquidity has been taken out. Look at it. Let me delete that for you. So buy-side liquidity has been taken, right? At the same time, sell-side liquidity has also been taken. So whatever direction the market goes now will be the direction of the trend because we're not chasing liquidity anymore. We've taken both buy-side and sell-side liquidity. So whatever the market does when it opens this week, whichever direction it goes to is going to be what? The trend for the week. It's going to be the trend for the week. We'll be either entering a correction or we'll be continuing the expansion to the upside. So that's pretty much it on gold. When the market opens on Monday, I'm just gonna observe the market on Monday. I'm not really going to trade gold on Monday. I'm just gonna observe the market on Monday and see what the market has in store for us. So that's pretty much it on gold. Looking at the market, that's pretty much it on gold. Nothing fancy, nothing new. No, that's it. So another trade I took also, I ended up having a break even on that trade. In fact, I could have taken profit, but since the market didn't hit my profit target, I ended up, you know, closing was in break even was GBP USD. I ended up having a break even trade on GBP USD. So sorry guys that my charts is like this. I usually trade GBP USD and Euro USD side by side because of the SMT divergence and also because they are positively correlated. So I just focus on GBP USD for now. So looking at GBP USD, we've currently hit a snag on I mean verify that overall for you guys. It's not you guys double line. Right. And let's show it on the daily time frame. Yeah. So good. Looking at gold right now, we've hit a major resistance. In fact, it's not meant to be a major GBPS. It's not meant to be. It's not meant to be. Excuse me, guys, for my stuttering. Um, it's not meant to be a major resistance like that, but we can see that price has been playing within this range. Broke above, traded back into that range, traded back, broke below, traded back again, broke below, traded back in again that into that range again. Now we've just been playing within this range, guys. We've just been playing. The market doesn't want to move further from here. I don't know why. We've just been playing. The market has broken out, yes, a couple of times, yes, but then we still see price just trading within that range. So that tells us that these particular levels here that I've highlighted are strong levels of resistance and support. So looking at daily time frame, we've traded back into the range of the resistance and support level, and now they've traded towards that support level, I mean resistance level. And now price is refusing to break above it. So yeah. So let me go to the 4 hour time frame. Looking at the 4 hour time frame, this was the trade on GBP USD, guys. This was the trade. It was very beautiful. Beautiful. It was a very beautiful 1 to 5 pips to reward. I was just in 10 pips to get about 53 pips. So this was the trade. I'll get into that later on. So when the week opened, yes, when the week opened, 4 hour time frame. There you go. Okay, when 4 hour time frame. Well, let us go to 1 hour time frame. I can explain it better there. So when the week opened, we opened with a very good bullish intent. So Monday we were bullish, Tuesday we were bullish. And towards the end of Tuesday, we had what a rejection. And we ended up closing bearish. Monday we're bullish. Tuesday we opened bullish. But towards the end of Tuesday, from around 11 a.m. in the morning towards the end of the day, we were bearish. So we ended up closing Tuesday bearish. Now, this is where my SMT divergence comes in. Right? If you look at let me delete all this so I can see clearly. So if you look at the 1 hour time frame, we can see that this bearish move, we also experienced that on the euro dollar too on Tuesday. We experienced the bearish move on Tuesday. Even on Wednesday, we still experienced what? In the bearish move. But one difference between euro dollar and the GBP dollar was that we ended up taking out the low of Monday on the euro dollar. While on Tuesday on GBP USD, we didn't take out the low of Monday. So we ended up closing the week on GBP USD and Euro USD with an SMT what? SMT divergence. So now once the low of Monday was taken out, I was expecting GBP USD to do the same, which is why I was selling towards the low of Monday. My take profit was at the low of Monday. I was selling to take towards what? I was selling GBP from around 1.35350 to around what 1.34820, around that level. So I was looking to targets, I was looking to see price take out the low of Monday. But fortunately, because of the CPI news, we didn't end up taking out the low of Monday. But what did we do? What did we do on GBPUSD? We can see clearly that we ended up what? Creating what? An SMT divergence. So last week, we ended up creating a lower low on Euro, while on GBP, we ended up creating what? Higher low. So that means that there's a crack in correlation, which gives me the confidence to say that once this week on GBPUSD, we are going to sell GBPUSD. That's what I feel. And I'm just speaking with what I'm seeing in the market because GBPUSD wants to take out this high. Clearly, this high is going to be taken out. And that's why GBPUSD hasn't started selling yet. But Euro USD has taken out what? The significant high that it needs to take out. So the first week of what is the first week? Yeah, the first week of the month, Euro USD ended up taking the significant high it needed to take. Why GU didn't take out the significant high. So I feel like before GU can continue going lower, right? Before GU can continue going lower, I would want to see price take out liquidity, trade back into this range, then tank what to the downside. That's my prediction on GBP USD. Because I feel like Euro USD is also going to tank soon. And between the two pairs, Euro USD and GBP USD, Euro USD is usually the preceding pair before GBP USD. GBP USD is the lagging pair, while Euro USD is the preceding pair. So once Euro USD starts moving lower, expect GU to start moving lower consequently. With time, GU will start going lower. So since Euro USD has started giving us lower low, I expect Euro GBP USD now to start giving us what lower lows on the low on the in very soon, probably this week or towards the end of the month. But right now, we are going to be bearish and I'm going to be bullish. Right now, I'm bullish on GBP USD and I'm targeting this high right here, targeting this level. I'm targeting 1.3 1.359. That's my target on GBP I target 1.359. That's my target on GBP. So yeah, that's pretty much it. Did I really explain this trade I took? Yeah, I was expecting since Euro was going lower, I expected GU to go lower. And once I saw indications to go low, I kept kept going low. But during the CPI, the market ended up stopping us out at break even. It is what it is. Last week was a break even week for me. So I've seen worse. Yeah, I've seen worse. So it's not that bad. Not that bad. So I'm grateful for last week. This week, we are gonna see what the market has for us and will maximize the opportunity the market presents to us. So that's pretty much it. The weekly week recap and what I'm expecting on the particular pairs I trade. So these are the three main pairs that I usually trade: GBP USD, Euro USD, and gold. The dollar index, I just use that as what confirmation for GBP USD and Euro USD or basically USD pairs that I trade. And GM Okay, let me analyze the dollar index for you guys. So looking at the dollar index, we'll go to the 4 hour time frame. We can see that while euro ended up creating what a lower low for the week, right? The dollar index created what? I'll draw it clearly for you. Created what? Higher high, higher what? Higher high, higher low. Meanwhile, GBP and Euro USD what created what a lower low. So that gives us the indication that the dollar is strong right now and euro is weak. So if euro is weak, the dollar is strong, and GBP USD is pushing stronger. Just that's bullish push for you and GBP USD is a struggle push. It's not really a strong push. It's just a struggle push. So once price takes out this high, guys, just start expecting price to start selling. Just start expecting price to start selling. So GM, UGM, dollar index I'm expecting dollar index to push, fill out this level of inefficiency right here, and then what? Push back to the downside. That's just my prediction on dollar index. So that's it for today, guys. Next week or this week, maybe I will, or probably let's see if let's see how busy this week is, because this week I think I have a couple of exams to write, so I'll be very busy, guys. So not really school exams, but like some certifications like that. So um yeah, that's pretty much it for today, guys. I will see you next week. And in case you've not subscribed to my YouTube channel, please subscribe to my YouTube channel, like and share with your friends and family, or share with your friends or anyone that is interested in learning how to trade Forex the right way. So with that being said, I'll see you guys later. Peace.